Hi guys, welcome to Crypto Insight. In these videos, I give you a rundown of what's happening in large cap crypto, and in particular, the options and volatility space. I started trading crypto options in 2020 after spending 20 years trading equity derivatives professionally. It's been a lot of fun trading the massive volatility in Bitcoin and Ethereum. And I can tell you as a vol trader, the markets with the most opportunity to make money are those that know how to move. I will give you the insight of my trading and experience and how I'm reading the options market flows and positioning my own book to trade the opportunities in the space. Don't forget to like and subscribe to the channel if you like these videos, and hit the notification bell to see these weekly videos as they are released. Thanks a lot and enjoy the video. So if we talk about crypto last week, the good news, the main headline I saw that was on the good news side would be Twitter releasing the Bitcoin tipping features, right? So, you know, that's more mainstream adoption. They're using the Lightning Network, which is like the layer 2 solution for Bitcoin. And, you know, Twitter's massive, right? So they're embracing it. They're embracing, you know, people can then send Bitcoin to each other via Twitter. That's quite a cool feature, basically, right? So that's more adoption, positive news for crypto. And they're also looking at NFTs and NFT authentication for profile pictures and avatars and things like that, right? So, you know, a big company like Twitter embracing crypto. We've seen a lot of big companies endorse and embrace Bitcoin, but that's just more of the same, right? So that's good news. But the overwhelming bad news last week was obviously China banning crypto again. Okay, and you know, PBOC has basically sent a notice to all banks making crypto transactions illegal, and it's a broader, you know, they're covering a broader kind of array of transactions and things within the crypto industry, basically, right? So it's a wider reaching ban, which is obviously not great. But you know, China has cracked down on Bitcoin like 7 times since 2013 or something like that, right? So the market's got used to the idea of China going after it. And that's why, even though we got the knee-jerk move lower, you know, on a Friday post-expiry, so we had this little bounce up here into expiry, which I'd said, you know, is going to be hard for Bitcoin to break miles away from its max pain area that we were looking at last week. And yeah, some people don't believe in the max pain thing. I'm a believer that if you're in the vicinity of the max pain near expiry, and when I say in the vicinity in the context of the volatility of the asset, if you're not, you know, if you're like one standard deviation away from it, then it probably is going to give you some kind of gravity. So it did seem to drag us back up there. And then timing wise, that China news dropped after expiry and we were free to go and we dumped, basically, right? So now, considering that news, the markets actually digested it really well. And actually the markets on Monday in Bitcoin were looking pretty bullish. We were back at 44, but we failed again, basically, right? So we're consolidating, we're chopping. To me, you know, the major area for Bitcoin for support is going to be this 38K to 41 area. Yeah. So it needs to kind of hold that zone. Probably this week is where it needs to hold that zone. And if it can manage to do that, then we may be able to stage some sort of bounce, you know, into October, which is seasonally quite a good month. October and November are usually quite good for crypto, basically. Okay. But, you know, like I said, the market's digesting it well. And why is it digesting it well? Well, you know, the network, the Bitcoin network, seems to have de-risked itself a bit from China, right? We had obviously a lot of the mining capacity leave China after the initial ban in May. Hash rate dropped and then it recovered. So basically that's signifying that the network's not so dependent on China anymore, right? Now, obviously, this latest ban is going to make it hard for Chinese consumers to play around and do much in Bitcoin, even though the mining has kind of already gone. But, you know, you've got adoption coming from all over the world, basically taking up the slack, right? So remains to be seen how this is going to play out and if the market's going to care a bit more as we start learn more about this ban and just how far reaching it is and how serious it is. But for now, the market's shrugging it off basically, right? So that tells you something. It could also be about the rollout of the central bank digital currency that China is rolling out. Yeah, so that may be the motivation as to why they're going after it again, to encourage their population towards that digital currency. But the truth is, anyone who understands crypto realizes the whole point of being in it is to get away from governmental control and get towards freedom, not the opposite, which is going for a Chinese central bank digital currency, right? So, but with China opting out of the crypto game, which is what it looks like they're trying to do, the big question really for crypto is going to be, how does the US react in terms of regulation, right? Do they see China leaving as an opportunity for them to embrace the space and be at the forefront of this massive innovation that is growing at a rate that is bigger than the internet was growing at the same age? So when the internet was the same age, I mean, those of you who watch Raoul Pal on Real Vision will know this metric or this statistic, but basically when the internet was the same age as crypto is now, the rate of adoption of the internet or the rate of growth was like 60% a year, whereas the rate of growth of crypto is 100% a year, right? Or more. So it's growing at a ridiculous pace. And, the US would, now that China is stepping back from it, the US is either going to say, oh, well, we don't need to worry about it as much because we thought we were being left behind with China being so big in the space that we needed to get involved. That's one reaction. The other reaction is, okay, let's take this as an opportunity to be at the forefront of this innovation, basically, right? So you need to watch what happens on that front and to see how the US reacts to this latest sort of Chinese gambit, basically. All right, so then in terms of the technicals, like I said, the support zones for Bitcoin, 38 to 41 is the area to hold this week. If we look at Ethereum, for me, the big line in the sand is 26. If it goes below 26, all bets are off and we could get a retest of those lows down at 1700, basically, right? So we're all hopeful that's not happening for those of us who are long and believers of this space. Again, the consolidation's there. It's chopping between, 27 and 31. It is a volatile animal, Ethereum, but like I say, that's the equivalent zone for me, right? So that 26 to 29 area is the equivalent of the Bitcoin support zone that I just mentioned, basically. And in terms of the spread, ETH versus Bitcoin, again, in no man's land. As I mentioned last week, it's not doing much, which means the two are kind of moving hand in hand with each other, basically. Yeah. Okay. What's been going on in the on-chain stuff? So this week, the highlights I would say for me are, so looking at transaction activity. So what's transaction activity telling us about Bitcoin? Here. So you've got transaction activity, entity adjusted. So that's basically because you've got a lot of transactions that aren't real economic transactions. They're just moving coins from one entity to another that, under the same ownership or whatever. So they've adjusted for that. And what they're showing you here is when you get these big bull runs in price, which are highlighted in green, they tend to come alongside some pickup in activity, basically. Okay. So we're not really seeing that, right? So we can't really expect to see the next bull phase from whatever you want to call it, breaking 50K and going to 80 to 100K. We're probably unlikely to see that unless we see a real pickup in the on-chain activity as well. Okay. And we're waiting on that for now, right? So waiting for the activity to pick up to really kind of fuel and kind of underpin the next bull wave. And clearly we're not seeing that in the on-chain stuff right now. Okay. Another interesting highlight from the on-chain this week would be this chart. So what are the short holders? What's the cost basis look like for the short-term holders? Okay. So this tracks what the short-term holders are looking like in terms of P&L, right? Are they, are we trading at a price where the short-term holders have kind of bought it? Are they offside? Are they onside? What are they doing? And then what happens to this yellow line? Often it finds a base at this short-term cost basis, right? So you've seen here, this short-term cost basis back in September 20, we bounced off this, right? In the pullback in price, we've kind of bounced off this and then we recovered from there, basically. Okay. If we break that cost basis, what does that mean? It means people, bought it, they were on side, the market came back down to their entry levels and they were running a relatively tight stop. And when the market broke below those levels, they all just dumped it and puked it, right? And we get these capitulations that, like we saw in May, where all those short-term holders are getting out because they want to limit their losses, basically. Okay, so we are retesting that short-term cost basis level. All that really says to me is we're at an inflection point, right? We're at a point where we're either going to bounce off this level, right, and stage, build the foundation for probably a nice rally over coming months, or we're going to break below here and a lot of these short-term guys are going to capitulate, basically, and that's going to probably snowball and lead to a bit of an acceleration to the downside. But basically what it's saying is inflection point is here, right? So just like the technicals are telling us we're at a bit of a key level, the on-chain stuff is kind of reflecting that as well, I would say. Yeah. And then the last thing is just echoing what we've seen over previous weeks. So that is short-term holders are accounting for less and less of the circulating supply, right? So short-term holders account for 20% of circulating supply, which is at an all-time low. Okay. Exchange outflows continue to dominate. So that liquid supply at multi-year lows, and usually when that happens, it's a bit of a precursor to some sort of supply squeeze and bullish price movements, right? But you need a catalyst for that. So we've definitely got low liquid supply. Okay, the hodlers have just been accumulating. Okay, but we've had negative news flow, like the big news flow has been negative. Now we need some sort of positive catalyst. If we get that, then the market is in a bit of a setup for a bit of a supply squeeze, given what the short-term kind of liquid supply seems to be. Okay, what could that catalyst be? Probably the most obvious thing is they approve some kind of ETF, basically, right? If they approve an ETF in the US on Bitcoin, you're going to get some optimism on that, and you're going to get some inflows in that most likely, right? So that would probably be the thing to look out for. Yeah. All right. So that's on chain, and then, as usual, we're going to do our vol roundup. So first thing to look at, I guess, is, realized volatility, right? So what did we have? We had a spike in realized vol on the China news. So you had 7-day pop to around 80, and then that's traded back down again to 60, right? So things have stabilized. The initial knee jerk happened, and we're kind of, again, sort of chopping around, but stabilizing to a more neutral realized vol level of around 60, which is kind of in line with where the 30-day realized has been trading for ages. Okay. If we look at what implied vol's done, this is kind of what October implieds have been doing. They've been trading in about a 10 vol point range, right? Maybe a bit more. Okay. Highs of 88, lows of kind of 75. But, we're towards the top end of that range right now. Okay. So short dated vol, kind of firm basically in crypto right now. And that's probably because we're at this inflection point, right? We're at this inflection point where people are a bit nervous that actually we could break wildly kind of either direction from where we are now. Okay. If you look at the term structure, what we're seeing there. So from about a week ago, we're seeing longer dated vols coming in because they were trading pretty stretched. The curve was quite a steep contango. So those vols have drifted in a bit, maybe 3 to 4 vol points, which in the back end is a reasonable amount, I guess. And then the front end, you can see, particularly this October expiry has firmed up a bit, basically. Okay. So we're seeing that in the mid 80s. So we're seeing less steepness between, say, October and December than what we were seeing, basically, right? Because gamma is kind of proving itself to be a little bbit more valuable than what we were seeing before we saw that China news, basically. Okay. But then the super short dated stuff expiring in a week or two is still trading a little bit lower down there in the 70s, basically. Okay. So that's what we're seeing on term structure. Like the trades that I often like to do is wait for those term structures to kind of pop and then do the long calendar trade if I want to earn some theta. I had been doing that. Obviously, the vols had collapsed a bit. sort of before the China news last week. So again, subscribers will be aware that I'd unwound a bunch of those calendars to take my short gamma positioning down a bit. And then we've had that move. I haven't really re-entered any short gamma positions because I think the market is at a bit of a precarious spot right now. So I'm not rushing to do short gamma carry earning trades right now. Now, what the trade that I have done is actually a trade on Ethereum. And I'll basically talk you through that. So if we look at the Ethereum term structure, what we've got going on here, we've got a relatively, what have we got here? So today this curve has actually popped quite a lot, right? October 98. So before for the trade, if we just have yesterday's curve or 2 days ago, where was it? Okay, that's probably the best one to illustrate, right? So if I bring up this curve here in Ethereum, you can see that's a pretty steep term structure, okay? You've got October vol, you know, around 90 at the money, and you've got this sort of December stuff at 100, fairly steep contango, basically, okay? On top of that, if you know how the skew trades in Ethereum, call options are trading quite rich. So a trade that I like to do to play the upside is where I buy short-dated, relatively short-dated calls like October calls, and then I fund them by selling the longer-dated way out of the money calls, basically, okay? And I do that to try and keep my theta neutral, and I play that relative expensiveness of that term structure and that skew, basically. So the way I've entered a bullish trade for a bullish view in October on Ethereum is to do that kind of cool calendar trade where I'm buying the short end and selling the long end, basically, right? Subscribers will have more detail on strikes and things like that. But, you know, that's the trade I've kind of been doing to get bullish, but to do it in a way that doesn't pay me too much, it doesn't cost me too much time decay, right? If you just go and buy a load of 10, 15 delta calls in October, you're going to be paying up for that skew, and you're going to be basically buying options that are priced well over 100 vol. And if you don't get your rally in the next week or two, you're just going to bleed a load of premium, basically, right? That's not a trade I want to do when I've got a curve like this that's giving me a way of expressing a similar view, but giving me more asymmetry and allowing me to keep control of my theta bill. I would rather implement it like that, basically. Okay. And then the last thing to show on Bitcoin is the skew chart. What's been going on in skew? I wouldn't say skew's kind of done anything kind of crazy. Hang on, let me bring up this one. So you see here, I mean, we did have this 30-day skew get pretty close to neutral, right? And that was basically happening after the weekend where Bitcoin was threatening to rally and basically look past the China news and go to the upside. So there was a bit of a short-term bid for calls that came, which neutralized that 1 month skew, but that's already faded but back down as prices kind of rolled over again, right? So short dated skews are still very much for puts. 1 week stuff is 16 vols for puts. 1 month stuff is 9 vols for puts. Then you've got the 3 month and longer is still for the calls, where you've got 3 months at 2 vols over for calls, 6 month at 6 over, 1 year at 8.5 over, basically, right? So again, the longer term outlook, very much people paying up for calls because they see that longer term bullish outlook not going away. But the nervousness in the short term, whilst it was momentarily gone in the 1 month, is firmly back again as we've retested this kind of 42 area and markets, you know, nervous about how much downside we could still have in Bitcoin, basically, right? Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.